4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. Building your discipline and confidence in live time is how you will be able to produce those results consistently over the long term. The 7-step daily routine for high performance traders is about developing your process, your habits, your mindset, your beliefs, your skill set to master the markets. Bulletproof yourself for success and consistency over the long term. The links are in the description box below. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today, a simple walkthrough from the past week of 4 basic playbook best trade setups. One of the most important things to take away from this video today is the understanding of doing nothing but hunting, not hoping, hunting, and sitting and waiting, and just looking for easy money-making setups, not trying to take trades everywhere, but actually hunting setups where you have a 90-10 edge in the market. Hunting, not hoping. Hunting the 90-10 rinse and repeat easy money making setups, not trying to take trades everywhere and catch moves, but hunting the setups where you have a 90-10 edge in the market. A really basic understanding is the Monday, Wednesday, Friday template. But one thing I want to emphasize really importantly, and write this down and listen closely, is that you may only get one 90-10 opportunity in the week on any one instrument. Let me repeat that. One instrument may offer you one 90-10 setup in the session that you're trading. And so what I want to emphasize to traders is we're not trying to get into a market and hope that it goes in our direction. We're hunting setups that are scalable, that are about to go parabolic. And that's where the money is made. Hoping, holding, all these other things are not the strategy that I'm looking for. So the opening range, Monday's the opening range. We've talked about a couple of different scenarios with opening range, but most importantly, let's go back to Friday first. The closing range of the week. Let's just go back to some simple understandings. Why am I hunting setups from the playbook? Because setups are where the easy money is made. I'm not trying to catch a move. I caught that move. I caught this. I caught that. I'm looking for the rinse and repeat that I can reproduce week after week on simple, easy money-making setups, regardless of the instrument, regardless if it's an index, a metal, a currency, or an energy, or even crypto. Now, here's the thing. If you're trading one instrument every single day, and one instrument may only offer you one 90-10 easy money-making setup in the week. Now, here's a simple thing to understand. Is that if you're trying to trade one instrument all the time, you're going to run into trouble. You're going to have days that are choppy, that are going to go sideways, that aren't scalable, that are going to put you potentially into tilt or into a 50-50, 30-70 at best environment. And that's where traders can really get themselves into trouble. But when you're hunting the same setup, regardless of the instrument, obviously, the ranges may change. The volatility could be different from an index to a currency pair or to a metal. But if it's an easy money-making opportunity, zero stress, zero thinking, zero emotion, zero science, and zero management, those are the opportunities that I'm hunting. Easy money-making setups. Now, we've talked about markets breaking out. So Monday, day one, the opening range in a new week. The first signal that an instrument can give us on a Monday, we've talked about 3 session setups. We've talked about not counter trending a day one runner. Let's take a look at 2 examples of that from the previous week. 2 simple understandings to process, and remembering markets only do 3 things. They break out, they pull back, and they trend. They break out, they fail and reverse, or they just stay in a range-bound trading range. Now we're looking at the Aussie dollar starting a brand new week. Friday was an inside day. Inside day is a signal day from the playbook. Inside day is a signal day, page 69 in the playbook. But remember, we just talked about Monday, Wednesday, Friday. Friday's the closing range of the week. Now, Friday was an inside day. We're looking at a 1-hour chart. And the most important thing, I just want to keep emphasizing simplicity. There's nothing rocket science or, to make things really simple, is to rinse and repeat. The inside day, we have level to level. We've talked about this in previous videos. Now, if traders came along in the Asian session, the market's already in process, we still have an opportunity to enter a market level to level on a range expansion opportunity. And on a Monday, we've talked about this, do not counter trend a day one runner. Day one runner at the beginning of the week in a market that has been making higher highs and higher lows. We have a market now expanding the range on Monday, day one, the beginning of a new week with an inside day signal. We have inside day traders potentially triggered on the break of the low of day level in a market that continues to strongly trend in the long direction. Now we're week 1, week 2, week 3 at the high of month level, taking out the high from February as well as March and the month April that we made at the beginning of the month. Now this market has traded higher at the beginning of the Asian session. Now although this market's pulled back 25 pips, this is an example of a market expanding the range on day one. Front side of the week, day one, day two, Tuesday typically expands the range. We have a market that has closed in breakout on Monday, pumped back up beginning of the new day on Tuesday, day two, and at the Europe Open, reversed at the high of month level. Week 1, week 2, week 3, all the way back down at the low of Monday, the opening range and initial balance, and also now closing as a first red day. First red day, page 58 in the playbook. But let's just go back to our understanding of the higher time frame and the monthly cycle. Now we can have months that open, proceed to trade lower and reverse on a first green day signal, pushing higher, pulling back, and closing out in the last week of the month. Week 1, week 2, week 3, week 4. And we can have the same thing apply in a first red day monthly template. So when we've broken out of monthly levels, we may potentially now have a market that is putting in an extreme, whether that's on a first green day monthly template or a first red day monthly template. Or we can have months that are just trading, and weeks and days trading inside in a narrow range or an inside month. But I'm just coming back to some simple things. There's traders trading the Asian session. There's traders trading the Europe-London window. And we have traders trading the New York session. Now we have Monday, day one, opening range. We have Tuesday, day two, our initial balance. In a high percentage of times, one of those extremes will tend to hold for the week. Now, we have a first red day signal. When we come into our Wednesday session, we've already broken lower lows on the inside, pumping back up to our highest closing price made on Monday, day one, the opening range. So coming back to some simple things, Friday's closing price is where the auction process began from. We've pumped higher, expanding the range, opening range day one, don't counter trend a day one runner. We've pumped higher, Asia into our Europe, London Open, dumping down, closing as a first red day, lower lows on Wednesday, day three, the midpoint range of the week. We have two types of trade opportunities on a Wednesday, trend trades or reversal trade opportunities, if indeed they set up. Now we have a 3-session setup on Wednesday, day 3, pumping higher in Asia, pulling back, pumping higher into our Europe, London Open, putting a high of day level in place. First red day is a high of day, high of session selling opportunity if indeed it presents. Now remember, we're on a 1-hour chart. We have our 10 a.m. club closing as a pin hammer, a 1-bar stop, and this is the 1-hour time frame. The next most important thing to understand about this is not counting little bars and little pushes and trying to get in on a 1-minute chart, but actually just paying attention to the time of day. Now, just let me repeat, it's a 1-hour chart, 1 hour, 2 hour, third hour on day 3 for the first red day trade. Now, I want to emphasize the importance of just sitting on your hands If you're a New York session trader, you may have had the first red day shorting opportunity on Wednesday, day 3, after a first red day signal. Coming back to what I said earlier is that one instrument may offer you one all-in opportunity in the week. So not trying to catch every little move and scalp this and get in and get out and grab this and caught that and caught this and caught that, but actually hunting a rinse and repeat setup, a first red day signal. Traders in Asia may have had the inside bar trade on Monday. Traders in London, Europe, London may have sold the high of week opportunity after it closed in breakout at the high of the month. Traders in the New York session may have actually had the first red day opportunity on Wednesday, day 3, the midpoint range of the week, after a signal day and the highest closing price of the month for a scalable rinse and repeat all-in opportunity. Keeping things simple. Rinse and repeat, scale it up in size. Coming back to a simple understanding, I'm just hunting, not hoping to get trades every day. Hunting setups that rinse and repeat. Markets only do 3 things: breakout, pull back, and continue. We saw that on day 2 for the Europe-London traders to have the high of month, high of week, high of day shorting opportunity. We saw traders in the Asian session on Monday, the opening range, have the inside bar signal for an explosive range expansion on Monday, day 1. And we saw the first red day set up on Wednesday for New York session traders for the reversal on day 3 back to the low of week level after taking out higher time frame monthly highs. Keeping it simple, not catching moves and grabbing this and grabbing that, but actually hunting setups that rinse and repeat. Now we'll contrast a Monday instrument that broke out. So we come to our screen, we have instruments that have broken out on Monday. We just saw an example of a day 1 runner on the Aussie dollar, but we have an instrument, the Mexican peso, that has broken out in our US session window. We have a market that closed in breakout on Friday, not quite an inside day, but the characteristics of an inside day. But more importantly, it's broken out in our US session. This is a textbook playbook reversal chart. Monday, day 1, the opening range in our 3rd hour again, 11 a.m., reversing for the explosive trade back to the high of day level. Now, contrasting that with the day 1 runner, we have a market that's broken out in our day 1 opening range, coiled sideways into our 3rd hour for the explosive parabolic trade back to the high of day level and the high of week in the new week. We can look at different instruments. The British pound was an example, as was the euro, of, again, day 1 runner, not counter trending a day 1 runner. Contrasting that with our Mexican peso, an explosive breakout in our US window and a parabolic reversal trade on Monday, day 1. Instruments that are in breakout in our timing window on day 1, a 3-session setup. Markets made a high, made a low, broken out, and a reversal trade, a 1-bar stop into our 3rd hour. Again, the importance of the time of day. Now, contrasting this from trying to just get into a market and catch a move, this is an actual setup. Let's go back and look at our British pound. This market is in breakout day 1. Now, traders are trying to short it up top, but there's no actual shorting opportunity here. We can go back to our hand-drawn chart of what our setup is, because there's only 2, dump and pump, pump and dump, trap and shift. Now, this certainly looks exactly like our Mexican peso on day 1. To understand the difference between a setup and trying to counter trend a market that is a day 1 runner or in breakout. It doesn't matter if we're looking at indexes or anything else. There's nothing hidden from traders. Last week, on a shortened Good Friday week, we had an inside week with 2 inside days. Our closing range of the week was an inside day. We have a market that was a day 1 runner on Monday, the opening range in a new week. That reversed and came back inside, closing back inside of the range on Tuesday and opening on a gap on Wednesday. Now, when it opened on a gap, just a simple thing, we now have traders who were short On Thursday, Monday, now trapped. Traders trade back thinking that all gaps have to be filled, but we had an inside week, and the same possibilities apply on the higher time frame as they do on the shorter time frame from the playbook. Page 69 in the playbook, the inside day, false break trap reversals. So we can look for gaps, sweeps, hunts, soups, arrays, premiums, discounts, or we can just see where traders are trapped on the wrong side of a market. And we had an all-in opportunity for traders in our New York window on Thursday, day 2 on the backside of the week, expanding the range and going back to where is the money. We have inside week traders trapped down low. The market has reversed. Monday, Tuesday, Wednesday, reset. Day 1, day 2, explosive move back through the high of the previous week as well as the inside week. Keeping things simple, sitting on our hands and waiting for when the easy money setups show up. Not trying to catch every little move on the inside and grabbing this move and grabbing that and catching this and catching that. That's silly. But hunting setups where you have a 90-10 edge, not hoping, hunting, not guessing, executing, entry, stop loss, and a take profit level in alignment with the higher time frame template. Again, just coming back to simple setups, trap and shift, dump and pump and dump. This is a 1 hour chart, dumping down to our breakout level from our inside day, reversing, coiling into our New York open for an explosive parabolic range expansion on day 2 on the backside of the week. Nothing is hidden from any trader. They all have the same information every single day, and it's whether or not they're patient and hunting the 90-10 setups and not hoping to catch a move and get it right. So in closing, I'll emphasize to traders to be patient and start hunting setups where you have edge. All levels are available to every trader on every instrument. And being patient and allowing the markets to set up. Give us signals. How does it set up into the session that you're trading? Any instrument, any session, being patient. And then when the setup presents, executing, locking in the money, and walking away. Keep it simple, rinse and repeat. Scale it up in size. See you in the next video, traders. Have a great day, and may the markets go with you.